All right. Good morning, everybody. Good afternoon, depending on where you're tuning in from, and welcome to this week's mobile coaching stream with the VectorVest Stock Advisory app. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, everybody is doing well. Hopefully, everybody can hear me. We should be live both on Facebook and on YouTube right now. So if you guys can hear me out there, start typing in VV Nation into the chat. Good morning, Manju. I already see the VV Nation starting to come in, so glad to see that. Also, good morning, Jay. Hopefully, you're doing well. So once again, welcome everybody to our weekly mobile coaching stream we do every single Thursday, where we cover what's going on in the market, but then also talk about, how to use the VectorVest Stock Advisory app to improve your trading. Today, we're going to be talking about one aspect that's, pretty close to me. We're going to be talking about the charting and talking about graphs and how to use the graphs to get the most benefit from them. From my history, graphs are an extremely important part to investing. Graphs are non-emotional, and as long as you're not trying to force what you're seeing and you just read them for what they're telling you, they can provide you a lot of insight and allow you to make better and smarter decisions on what stocks to be getting into and what stocks to be getting out of. So, no matter who you are, whether you're a beginner, whether you're been in the market for years, whether you're a long-term investor, whether you're a short-term investor, charts are going to be an extremely important part to your investment strategy. So if you guys want, we can go over your stocks today as well, use some of those. So we'll get to those in a little bit. But just starting to see a lot of people coming in. I saw the notification coming in. Let me go ahead, before we get started, just turn that off real quick so that way we don't get interrupted during our sessions. Sold my contracts too early. Now I'm afraid to jump back in. Mash, hey, we'll talk about that in a little bit. Maybe we can even analyze some of those here together. Graphs of the DNA of a stock. Completely agree, Jay. Brooklyn in the house. Welcome, Mark. Hopefully you're doing well. Alberto, hopefully you're doing well. Glad to have you here again today. Glad to see you. Let me check the Facebook side. Looking for comments. All right. There we go. VV Nation in the house. All right, so everything should be good. Hopefully you guys are having a good Thursday so far. We did have the Fed announcement yesterday. We saw the markets quickly drop, quickly rally, and then head lower by the end of the session. Looks like we're getting a little bit of continuation with that here today. All right, so for anybody that's new, that's just tuning in, what we typically do is we first start to take a look at what's going on in the market. Then we'll dive into our topic of discussion, and then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So if you guys want to see your stocks analyzed, make sure to stick around towards the very end and we'll analyze those there for you. Also, since we're now starting to see everybody starting to get in here, I think the notification just went out. If you guys could take a second, just smash that thumbs up like button below. That would help us out with the YouTube algorithms. It doesn't cost you a thing and allows us to continue to grow our channel and continue to bring this content here for you guys to teach you how to become better investors and also grow the VV Nation community. So if you haven't already, go ahead, just spend a second, hit that thumbs up button. All that helps us out. Once again, doesn't cost you a thing. All right, so with that, let's go ahead, jump right into the software here today, take a look at what we have going on in the markets, and then we'll move into looking at some charts and looking for what they're telling us here. All right, so right now, the Dow is down about 0.2%. The NASDAQ is down 1.2%. S&P 500 is down about 0.2%. VectorVest Composite also down about 1.2%. Therefore, that market action has our needle 3 ticks into the red, so the color guard is bearish and VectorVest does not advocate buying any stocks at this time. As always, if you ever want to stay up to date with what's going on in the market, you want to a quick recap of what's going on and how to prepare yourself, what news you need to be aware of, I highly recommend watching the daily color guard report every single night, Monday through Friday, where we'll recap all of that for you and make sure that you never get caught off guard with what's going on in the market here. So as we scroll down, taking a look at the color guard, we can see a lot of red lights lately, no surprise there, but we do have some positive news that we'll talk about in just a moment. So first off, let's start off with talking about the price. Well, the price is based upon the VectorVest Composite. The VectorVest Composite is an arithmetic indexed average of about 9,200 stocks out there, and this gives you a better representation on what's going on in the overall market. It's not just looking at subsets of the market, it's looking at the overall market here. And since it's red, that tells us we're moving lower day over day and week over week. The next indicator is the RT, or relative timing, which is looking at the short-term price trend of the overall market, and it's cast on a scale of 0 to 2. Since it's below 1 and it's red, that tells us the RT is moving lower day over day and week over week, and the short-term trend of the market is down, picking up steam to the downside here. The next is the BSR, or buy to sell ratio, which indicates the overall health of the market. It's looking at the number of buy-rated stocks in a database and comparing it to the number of sell-rated stocks in a database. Well, when there's more sells than buys, as there is now, the buy to sell ratio will be below 1. As we can see, it's currently sitting at 0.11, which indicates overall market weakness. Now, the trend of these three indicators are comprised to come up with the MTI, or the market timing indicator. And the market timing indicator is looking at the underlying trend of the market, and it's cast once again on a scale of 0 to 2. If it's above 1, the underlying trend of the market is up. Below 1, the underlying trend of the market is down. So right now, the MTI is currently sitting at 0.51, indicating the underlying trend of the market is down here. After the MTI, we then get the trend column, which shows two parts of the trend each and every day. The first part is referred to as what we like to call the primary wave, which shows the short-term or simply weekly trend of the market. As we can see, it is down since the price of the VectorVest composite is lower than what it was compared to 5 trading days earlier. Second part of the trend is looking at the underlying trend, or the MTI, and since the MTI is below 1, the underlying trend of the market is also down. After the trend, we finish off with the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. Therefore, we never want to ignore a confirmed call change. As we can see right now, we still remain in that confirmed down situation as of today. Now, I did talk about positive news, some good news that from seeing all this red here. The good news that we're seeing is looking at the readings of the MTI and the buy to sell ratio. Well, historically, when the MTI gets to a reading of 0.6 or below, that indicates that the market's starting to look for a bottom. Doesn't mean once we hit that 0.6 or below that the market's going to instantly rally. It just means that we need to pay closer attention to what's going on in the market, follow the color guard a little bit closer, and wait for that opportunity to start getting back in. So right now, while we don't have the positive signs we're looking for quite yet, we are in that territory finally, officially, so that way we can start to possibly look for a bottom here in the market. Now, I also mentioned the buy to sell ratio. The buy to sell ratio, or the BSR, whenever it gets to a reading of 0.2 or below, that historically has shown an extremely oversold condition in the market. And so therefore giving us another indication that the market may be starting to look for a bottom. Once again, starting to look for a bottom. Not saying just because we hit that oversold condition, the market's going to rebound. This is stating that we are close to a bottom. Maybe not there quite yet, but definitely getting close. So what we're looking for, as we've talked about in the past, we want to see, green lights starting to show up in the price column of the color guard on the home page. We want to see the primary wave turn up. So one of those two, or seeing the primary wave turn up, is probably going to be the first thing we notice. Then seeing a green light in that price column, the color guard on the home page right here, is going to be the earliest sign that the market is starting to finally move higher. So, we got to be patient. Patience is a virtue. Let's wait for that green light before we finally start, slowly stepping back into the markets here. But this is a good sign that we're finally getting to that oversold territory. So glad to see it. Most of the pain hopefully is out of the way by this point. But we just got to be patient and wait for those signs that the reversal is starting to take place here. Market timing graph is trickling down today like water torture. Yeah, very true. All right, so last but not least, the last thing we want to take a look at here on the homepage is the advanced declines at the very bottom. And as always, as an investor, you should definitely be taking a look at the advanced declines before ever purchasing a stock on any given day. When looking at the advanced declines, you want to favor a 2-to-1 bias. So if the markets were moving higher, we want to see twice as many stocks moving higher than lower. And if the market's moving lower, just the opposite. We want to see twice as many stocks moving lower than moving higher, or declining than advancing. Right now, 16% of stocks are moving higher and 72% of stocks are moving lower. So therefore, if you're going to be playing the market right now, At most, we should be playing it to the downside. But then again, we should definitely be, erring on the side of caution, knowing where the market timing is, and adjusting our trading plans accordingly. Morning, Chris. Hopefully you're doing well. Let's see. Just use your best favorite stocks and use the best technical indicators to pick favorable momentum stocks. VectorVest has a bus selection where you can choose or you can pick comments. Appreciate that, Lou. All right. So with that, speaking of technicals and charts, let's go ahead jump right into it here today. Give me one moment. All right. So if you guys have stocks that you guys want to request, start putting them in. We're not going to analyze them, but we can start to go ahead and refresh. All right. Should be good now. All right. Is that better for you guys? Can you guys hear me out there? Looks like something's going on with the YouTube side. There's an issue with the connection with YouTube because Facebook seems fine. Just seems like it's the YouTube side. So, all right. Martin's giving me confirmation. Good now. Yeah, I don't know why that is. The last few weeks we've been having some issues with Facebook or with YouTube. Facebook's fine. Previously we've had issues with Facebook. YouTube's fine. I'm sorry. I don't know why that happens, but we should be good now. So let's keep moving on. So we've got some stocks requested already. Let me make sure. So yeah, we'll just use some of these for right now. Go ahead, create the watch list. Examples. Say okay. Need to upgrade that Windows XP. Why? I don't want to upgrade from Windows XP. Maybe I should upgrade to Vista. I heard that one's a lot better than Windows XP. All right, so first and foremost, whenever you build your watch list, as always, VectorVest will automatically rank it, bringing the best candidates to the top and the worst candidates to the bottom. So depending on your time frames, we're going to look at it from a shorter term perspective, but then we could also take a look at some longer term outlooks or views as well. So first and foremost, once you get into the stock, you can analyze the stock right there. As always, you have the 4 indicators are cast on scales 0 to 2. Above one is favorable, below one is unfavorable. Put some glasses on. Yeah, right, Drew? I got to get my serious face on, apparently. All right, so ADM, Archer Daniels. Right now, what we see are envelopes. We have a 10-period EMA. Let's go ahead, actually get into the settings. So at the bottom of your graph, you have the graph settings button. You have that little gear icon. You can tap on that, and that gets you into the graph settings here, where you can choose your time frames, your frequency, so whether you want daily or weekly charts. You can use area or candlesticks. Personally, I prefer candlesticks over area graphs just because candlesticks provide more information. Area is just based off of closing data, and it's connecting a line, basically making a line chart. Candlesticks show you a lot more information, such as the open, high, low, and close for the day, so you can gain some extra insight on what went on throughout the day, which could indicate some potential reversals that you may not see with an area or line chart. So I prefer candlesticks, but to each their own. The moving averages, if you're looking for longer term moving averages, you can use, longer term moving averages. You could look at a 50 and 200. That's typically the more commonly used ones for longer term investing. Shorter term investing, I personally prefer using the 3 and the 8 exponential moving average, which I already have pre-built here. You can just simply turn them on or off. You can customize them by selecting simple, exponential, or weighted, using the plus or minus right there to increase that number or decrease that number, or you can just simply tap on it and type in the number manually, whichever one's easiest for you. We're going to go ahead, use the 3 and the 8, go back here. Envelopes we have already selected, so it looks like I had the DEW set up for a while. So envelopes, haven't quite talked about it in our technical analysis series that we're doing right now on our YouTube channel, but this is most likely going to be the next one we take a look at. Envelopes are great to indicate severe or extremes in price. So we're going to use envelopes because those can help you identify some good opportunities of when to jump into a stock. Also, some good opportunities on when you should be tightening your stops as well, making sure that you lock your profit in. So we'll keep those on for now. Support resistance, by far the most popular crowd mentality indicator. We talked about it quite a lot over the last few weeks. Not going to talk about, or not going to get into it too much for this for today. Maybe we'll talk about it for a few minutes, but we're going to focus on the other indicators that we haven't really discussed too much over the last few weeks. So we'll skip that, keep that inactive or turned off for now. Then we'll go to the lower indicator, and we have a lot of different indicators you can use, but RT is a great one. Once again, RT, the relative timing, is that short-term price trend indicator. So if you're looking for a technical indicator, RT is a great option to choose. If you're more long-term focused, earnings per share is by far one of the most important indicators to look at, because earnings per share shows whether or not the company is making money or losing money. And also, not only if they're making money or losing money, but have they consistently made money quarter over quarter, year over year. And companies that are growing their EPS are companies that continue to thrive or continue to go higher over the long term. So EPS is an extremely important indicator for the longer term investor, which we'll discuss here in a little bit. But then below you, after the EPS, you then have your technical indicators such as MACD, RSI, or DPO. So we'll use RSI, which indicates overbought, oversold conditions in a stock. Go to the settings just to make sure we have that on here. We'll change this to a 14 period. RSI, by far my favorite settings to use. Getting out of there, going back, taking a look at the charts. So with ADM, for example, we have the RSI at the bottom. We have the price shown in candlesticks. You have the envelopes on here, and where's my moving averages? Did I not have those on? Yeah, I do. Why are my moving averages not showing? Let's go 6 months. There we go. All right, and then you can see the moving averages shown right there as well. So with ADM, whenever you see right here, for example, you hit the lower part of that envelope, that shows an extremely oversold condition in the stock. Therefore, probability tells us it's more likely to see that stock rebound, start to move higher, then continue to go lower and break down below that lower envelope. So you keep an eye on that. You look at the RSI. RSI also was in extremely oversold conditions at that point. I'll maximize it so you guys can see this a little bit better. RSI was also in extremely oversold conditions at that point. So therefore, you have an oversold indication waiting to see a potential reversal sign. So that could be from a candlestick pattern, which it looks like you got, what is that? A bullish harami right here that next day. That could indicate when you got follow through there as your entry. Yeah, it drifted a little bit lower, but RSI was still continuing to pick up. It was staying away from that lower part of the envelopes, and then started seeing the stock moving higher, continuing to run. RSI got into that overbought territory around the end of August. And then that's the point when you see RSI or an overbought, oversold indicator showing you that you're in that overbought territory. That is an indication based off the technical indicators that, if you have this stock in your portfolio, and you have some decent gains in it, you should be considering tightening up those stops to ensure that you're locking the profits in case the stock starts pulling back. Rather have it and not need it than need it and not have it. Once again, that's my motto. I say quite a lot here, not only in this stream, but in all the streams that we do here. Trading in the markets is all about preparation and making sure that, you're prepared for whatever the markets can throw your way. So when you see when you see a stock that's getting into that overbought territory, that's the time that tells you, now is the time I should start tightening up my stops to make sure I'm locking my profit in. So going to the next one, getting out of this, going to the next, looking at Frey. Frey, from you hit an overbought territory, looking at it here. So the price was running, and then you hit an extreme level in price, showing you that, hey, this stock is more likely to start pulling back at this point than to continue to run. Also, if we zoom in, look at the candles. You had a bearish engulfing pattern as it was breaking through the upper part of that envelope. Looking at RSI, RSI is above that level of 70, so therefore it's an overbought territory at that point. All indications at this point are telling you that, there's more downside risk than upside potential. It's not saying that, it's going to instantly reverse. And at that point, when you broke that day, you didn't know that the bearish engulfing was going to be forming the next day, but you know that the price is at an extreme level. So this is a great indication to tell you, hey, now is the time I should tighten up my stops, make sure I'm locking my profit in. Then the stock continues to move lower. And looking at the RSI, even with that, it getting close to that lower part of the envelopes, RSI still had more room to go. Now, when looking at RSI, if you haven't watched a series, which I highly recommend to go check out if you haven't already, RSI above 70 is overbought, below 30 is oversold. So even though you're at the lower parts on the envelopes, the RSI wasn't confirming that yet. The RSI was actually telling us that we still have more downside risk or more downside to go before we get to that truly oversold territory. Well, you saw a slight pop here for a couple of days, then it continued and then actually broke below the envelopes here. This is where at that point you could start getting interested in potentially jumping into the stock, because it's oversold. You know that at any point it could rally back. You wait for confirmation. What do you have? You have a bullish, or you have a hammer here, get fall through the next day. RSI starts coming out of that oversold territory. Stock starts getting back into that channel or the envelopes. Stock continues to move higher for a bit. And then that point pulled back. Even at this point, you may have been underwater by 1% or 2%, but you're most likely still not doing too shabby in that position, especially consider what's going on in the market. Then all of a sudden, you look at it and you realize we're at a double bottom. You have that strong level of support, and then stock starts rallying sharply. Well, you broke through that level, that upper part of the extreme here. RSI was in oversold or overbought conditions, telling you to tighten your stops. Yeah, you may not have exactly hit the exact top on this one, but you're guaranteed to lock that profit in. And as our founder, Dr. Dolito, says time and time again, you can't go broke taking profits. So this is why, charts are an extremely powerful tool that everybody should be using regardless of whether or what type of investor you are. This is looking at from a short-term perspective, but we'll take a look at the longer-term perspective in just a couple of moments. Cedric, good morning. Is VectorVest more about trades within a day, up to a few weeks, or month mainly? So Cedric, that's the great thing about VectorVest. And I think a lot of our subscribers that are here today can back this up, that VectorVest can be used by all sorts of investors. We have subscribers that are day traders, and we have subscribers that are long-term investors. The VectorVest tools are so unique that they can be used to accommodate any style of investing. We have speculative, aggressive, conservative, and prudent traders all using VectorVest. So it doesn't matter what your investment style is. There's going to be tools inside the VectorVest program and VectorVest sphere, if you will, that will greatly increase your performance regardless of your personal investment style. So hopefully that answers your question. I know that's a little vague, but then again, that's what VectorVest is for. We accommodate all styles of investing. We're not just, one of those companies out there that focuses, hey, you have to be a day trader. This is what we're going to do. We're going to feed you trades constantly throughout the day. We're going to send you alerts saying, buy this now, sell this now, do that. Or we're not going to say, we're the long-term investors where you just buy and hold this stock for the next 20 years, and that's what we're looking for. The tools can be used in lots of different ways, and there's so many tools inside the VectorVest system that we can accommodate any style of investing out there. All right, so hopefully that answered your question. Thank you, Drew. Glad to hear it. All right, so looking at that one, we looked at that. Moving on to the next. SAIA. Let's go ahead, zoom in. Let's zoom out to a 1 year. SAIA. Looking at it here. Stock had a great run coming in November, right before the peak of the market. You were outside of that upper part of the envelopes, telling you you're at an extreme. Look at the RSI. RSI was above that level of 70, also indicating an overbought condition. So now at this point, you know there's more downside risk than upside potential. If you were an SI or SAIA, would this have looked like a decent opportunity to start taking your profits? Well, let's continue to move through time. I know we all know what happened, but let's go ahead and take a look at how this story played out. Well, you started locking your profits in there. Yeah, you didn't nail the exact top, but you're locking profits in, and now you're seeing the stock continue to diminish. It got close to closing outside of those envelopes, but it never did. It pierced it a couple of times, but never really closed below that point. Continues to move down. Then at this point, okay, you're finally trading outside of the envelopes, showing you that you're in extreme oversold condition. Looking at the RSI, it's also confirming that. So therefore, you're in an oversold condition. You're at an extreme level to the downside in price action. This may be a time to start paying closer attention, looking for an opportunity to start maybe entering back into this one. Okay, so you waited a little bit, saw reversals, doji here, getting followed through the next day. Maybe you took that, maybe you didn't. Continue to move lower. Maybe you gotten, around here, maybe you didn't. But then at that point, price did have a decent rally. Got to that point, you saw the bearish candle pattern, you saw it was in overbought territory. If you took advantage of that rally, maybe you didn't, maybe you just moved on at that point. You've been waiting so long, never got a good answer or got a good opportunity to get in. So maybe you just got rid of the stock or took it off your watch list, moved on. But if you did, enter in somewhere down here, when you were noticing these oversold conditions, you may have been down at some points, but excuse me. Excuse me, sorry. Allergies this time of year. Not my friend. But you may have gotten a decent opportunity there, but then you saw the reversal, stock came down lower. All right. So, SAIA, there's that example. Last one, JP Morgan. Now, first and foremost, JP Morgan is one that most likely you're not going to be invested in because it's not really looking at what we talked about or what VectorVest typically advocates for. With the VectorVest philosophy, you're looking for stocks moving from the bottom left to the upper right and not from the upper left to the bottom right. So therefore, JP Morgan is the exact opposite of what you want to look for a successful trade. So even with that, you want to, technical analysis is great, but no matter how good you are at technical analysis, if the stock is not moving in the direction that you want it to be moving, you're trying to catch a falling knife here. And so therefore, you want to stay away from these types of stocks. Technical analysis will help you time your trades when you have the stock already moving in your favor and not help you try to predict the future of when the stock is maybe going to reverse, do a complete U-turn and start moving the other way. So this is probably going to be one we would just simply move on from to begin with. All right, so now we've covered that. Let's talk about from a longer term perspective. First and foremost, allergies, no bounce today. So yeah, that's the thing is, I used to have allergies about once a year during the spring growing up as a kid. But when I moved down here to North Carolina, the allergies here are a whole nother ballgame. The allergies in the South are like nothing you ever experienced before. All right, so let's talk about long-term investing though. If you're a long-term investor, charts are still going to be extremely useful for you. Let's go ahead. We'll go to this premium watch list for now, and we'll take a look at Let's go down. Where is it? Safest stocks with buy ratings. So as a long-term investor, first and foremost, your emphasis is going to be on fundamentals and making sure that the company is making money continuously. So when you set up your charts, you want to set them up in that fashion. So therefore, having envelopes, having a 3/8 exponential moving average, having RSI isn't going to do a whole lot for you. We go to the graph settings, we customize our graphs. Let's change our moving averages to simple, and we'll do a 50, and then simple, and then we'll do 200. Go out of here, change our lower indicator to earnings per share. As always, earnings is the engine that drives stock prices higher over time. So if you're a long-term investor, earnings are going to be a main thing you want to keep an eye on. Take off envelopes. Maybe you'll add support resistance, a longer-term support resistance. Maybe you won't. But we'll keep it simple. Let's go ahead. Where's our moving averages? Why are they not showing? There we go. Took a second to get them calculated there. All right, so let's go ahead and maximize it. As a longer-term investor, what you're looking for on something like this is the shorter term moving average or the 50-day moving average being greater than the 200-day moving average. And you also want to look for a nice steady rise like a stair-step pattern from bottom left to upper right with the earnings per share. For AZPN, you had that 50 crossing above the 200 back here when it was trading at around $150 a share. Earnings steadily rising and now starting to increase in pace even more. And now the stock's trading at 220. So from a longer term investment standpoint, this is a great entry, good opportunity here. If we move on to the next, TPL, another one. You have a nice steady rise in price. You had the 3/8 crossing over here. You have a nice steady rise in earnings. Everything that you want to look for. Stock looks good. And it was trading at, oh man, this is an expensive one. Trading at around, what is that, 1,300? Let's call that 1,400, 1,378. So let's round that up to 1,400. Now it's trading at almost 1,800. So $400 a share extra. Not bad. Moving on to the next one. 3/8, been positive for a while. Nice steady rise in earnings. There you go. LNG, another good one. And now if you do want to use technical analysis from a longer term perspective, we can, as we've talked about in the past. MACD is a great indicator to look at that can be used from both a short term and a longer term perspective here. All right, so let's go ahead and take a look at that. So when looking at it from a MACD perspective, what you're looking at is that level of zero. We'll use LNG as our example. Level of zero is indicated there on the far right. And whenever the MACD line and the signal line are greater than zero, that gives you a longer term buying opportunity. Not, buying and holding for 1 to 5, 10, 20 years, but, holding for 3, 6, maybe 9 months, maybe a year even. So MACD can be used from both of those aspects and can still give you the added insight of short-term trend as well as that longer-term trend. When you combine it with, a pair of moving averages, maybe not a 50 and 200, maybe you'll dial that down a little bit, but, maybe a 20 and 100-day moving average or some sort of, play around those, you could definitely increase your success rate and help remove some of that noise that, a shorter-term trader is playing. You focus on the bigger, longer-term trend. And now, as always though, depending on your own personal preference and your own time frames that you're looking to invest in, could really, set the stage for what indicators you use, the time frames you use, and, what pair of moving averages or what technical indicators you consider. So always keep that in mind when setting up your own trading plan. This is really to help get the ball rolling, help you guys learn more information about how to set up your graphs, what indicators, you could start off taking a look at, really help you guys start developing your own trading plans, because when you have a trading plan, that will allow you to remove your emotions out of your investing. And as always, Removing emotions out of your investing is the easiest way to increase your overall performance in trading. So, or in investing in general. So, that's what we're looking to accomplish here today, is to help you guys get ready or get the ball rolling if you haven't already on developing your own trading plan and knowing how to use some of these indicators and how to customize your graphs to make sure that you can follow your trading plan easily and faster than anywhere else out there. All right, so with that, if you guys have any other questions regarding any of these indicators, by all means, let me know in the comments or in the chat or in the comments. And then if you guys have stocks that you want to take a look at, let's go ahead and start getting those in the comments there or in the chat, and we can start taking a look at them together. Ron asks, when you were showing the envelopes, were you using the standard 10 and or 6 SMA? So I believe the settings I had on here, let's go ahead, envelopes. I had an exponential 10 and 10 as the default there for it, Ron, but with any indicator, you can see you have the ability to customize it so you can, switch it to whatever settings you prefer there. All right, so as always, to get the stocks that you want to see, we'll just simply go to the magnifying glass in the upper right, and then starting to take a look. KLIC. We'll use this as our example, so we'll take it a little bit slower on this one, and then we'll move faster from here. So, as always, the 4 indicators at the bottom are cast on a scale of 0 to 2. Above 1 is favorable, below 1 is unfavorable. The first one we look at is the RV, or relative value, which is looking at the long-term potential of the stock. So with KLIC, since it's above 1, that indicates good long-term potential with the stock over the next 1 to 3 years. The next indicator is the RS, or relative safety, basically the amount of risk involved in the stock compared to the average stock out there. Above 1 indicates less risk than the average stock. Definitely a good sign. Third is RT, or relative timing, that short-term price trend of the stock. And since it's below 1, that indicates the short-term trend of the stock is down. Not good. The combination of these 3 indicators are comprised to come up with the VST, or the value, safety, and timing indicator. And that is above 1. So overall, the stock is favorable. The stock has really good fundamentals. Just the technicals right now are telling us now is not the time to be holding it in our portfolios. All right, so now that we've covered the indicators, let's see how fast we can do this. NUE is the next one. Let's go ahead and take a look. So NUE has great long-term potential, has less risk associated with it. However, it is in a steady decline. So overall, it's a good stock, but right now is not the time to be holding it in your portfolio. Once you own a stock, RT becomes the most important indicator out of all 4 of these indicators, because that tells you whether or not the stock is making you money or losing you money. And I think we can all agree it does not make sense to hold stocks that are losing you money. Crocs, CROC, or CROX. So Crocs, great long-term potential, a little less risk than the average stock out there. However, you are in a steady decline. Overall, it's a decent stock, but the timing is just not right. CEIX. Good long-term potential, but this one has more risk to get to that long-term potential. It is in a really strong short-term uptrend, so overall, stock is favorable. TK. Okay, long-term potential, but a lot of risk involved with this stock. You're in a really strong short-term uptrend right now, though. Overall, the stock is favorable. DRV. Since it's an ETF, the RV and RS are always going to be pegged at 1. Therefore, your primary focus with any ETF is going to be the RT. If it's above 1, the ETF is favorable. Below 1, the ETF is unfavorable. So at 1.89, DRV is definitely favorable right now. Police SWAT saying Tom Lee is on CNBC. Stock market may reverse to a high green today. We'll see. All right, we're good now. YouTube froze again. YouTube crashed again. So we'll do one more. We're going to wrap it up because today I've got an announcement at the very end. So just stick around for a couple more minutes here. So end phase, you have good long-term potential, less risk associated with the stock. You're still in a strong short-term uptrend, even with the pullback here today. Overall, the stock is favorable here. All right, so let's jump back to the homepage. And so at the very top, you have the stock market masterclass. If you guys haven't registered for this yet, make sure to do so right now. You can click on the link in the description of today's video or pull up the app, click on that, and you can get the analysis, or you can sign up now. It's going to be a free one-day training course to help you guys really learn how to manage your portfolio effectively. So if you know somebody out there that may not be part of the VectorVest VB Nation, you know, tell them about it, spread the word to all your friends, get them all registered, because once again, it's free and you're going to learn a lot of useful information to help you, you know, take control of your own financial freedom here. Also, typically, Glenn does have Trending Thursdays coming on at 2 p.m. Eastern today, where he talks about the headlines that are making the news in the market and really driving the markets. I will be covering that for today, so come back at 2 o'clock if you guys want to hang out for Trending Thursdays. I will be covering that one, here, so I can't wait to see you guys for that. Also, if I didn't get to analyze your stocks here today, I do apologize. We got a lot going on. There's been a lot of stocks requested. I apologize if I didn't get to them. If you are a subscriber, just simply pull up the Stock Advisory app, tap on that magnifying glass, type in your stocks, and you can do the same analysis anywhere you're at on the go at any time. If you're not a subscriber, click on the link down in the description today or today's video. Sign up for the 2-week free trial, put it to the test, and you can do the same analysis once again on your own, wherever you're at any time on the go. So on that, looking at the overall market, the Dow is now down 0.4%. NASDAQ is now down 1.5%. S&P is down almost 0.9%. VectorVest Composite down 1.4%. So the markets are getting slightly worse than where we looked at them earlier this morning. We still remain in that 3 ticks into the red, so therefore the color guard is bearish, and VectorVest still does not advocate buying any stocks at this time. Scrolling down, MTI staying about the same, buy to sell ratio staying about the same. Looking at the advanced declines, 15% of stocks moving higher, almost 75% of stocks moving lower. Clearly not the day that you want to be buying stocks long. So for everybody who was asking at the very beginning, you know, should I be buying right now? Always consult the color guard. Always consult the homepage before ever considering buying a stock. So on that, it's been my pleasure being with you guys today. I hope you guys have a great rest of your trading day. You know, make sure to come back at 2 o'clock for Trending Thursdays. And on that, take care, adios, and toodles.